Hello and welcome to Business Incorporated live on Channels Television. The TGIF trade is in full throttle right now. Here's what's coming up on the show. Kenya's central bank cuts a key lending rate to 11.25% from 12%. And Egypt is set to launch a new gold exploration bidding in the first quarter of 2025. Plus, Ethiopia earns over $674 million from coffee exports in just 4 months. And it's good to have you join us. I'm Ladi Williams. Let's see how the markets are performing for this TGIF trade. Started with metals. Good, see gold prices, they edge higher today, but they're headed for a second straight week of decline, while market participants, they're bracing for U.S. payrolls data that's expected to provide cues on interest rate cut trajectory. That's in the U.S. And we see spot gold 0.3% up, $2,638. It's mostly green for the metals that we track. U.S. gold futures $2,661, up 0.5%. Spot silver on the flip side, that's trending downward today, 0.1%, down $31.30. And platinum, palladium holding up right there, just silver. That's the lone laggard for today. Data showed the number of Americans filing new applications for unemployment benefits rose slightly last week, pointing to steadily easing labor market conditions heading into the final stretch of 2024. So we see all of that impacting investor sentiment right there in the metals market. Let's get a check on what's playing out with oil now. We're seeing early Asian trade today. It was red, and this afternoon we're still seeing Brent and US WTI pressured for this Friday trade, $71 there. Brent trying to hold on to the $70 psychological level. WTI crude down 0.29%. So it's all about what OPEC Plus is seeing for oil cuts, production cuts that's going forward. But for the week, Brent is on track to drop more than 1%, while WTI, marginal gain of about 0.1%. That's for the trading week. All right, to other stories now. We see the Nigerian Exchange Limited has held its latest edition of its Made of Africa Awards in Lagos, Southwest Nigeria. The event, which is designed to recognize companies and individuals within the capital market ecosystem that demonstrates exceptional performance in value and delivery and sustainable impact, and act as key drivers in strengthening the Nigerian and African capital markets. During the occasion, the Chief Executive Officer of the NGX Limited, Mr. Jude Chiemeka, in an interview with Channels Television, highlighted the significance of the NGX Made of Africa Awards and its role in promoting African excellence among locally listed companies.
The sterling performance of the market last year, or this year rather, can be attributed to the contribution of this market ecosystem, from the issuers to our trading license holders to the solicitors and all the capital market participants that are responsible for the turnover that we see in our market. So today is a day that we recognize such contributions, not just institutions, but also individuals that have made significant growth to our capital market this year. Data is really the basis or the bedrock of our engagement. And yes, we do have, as you're aware, the NGX group itself has a holding company, and it has 3 subsidiaries: the NGX Limited, which is the operating exchange in terms of listing and trading. We also have the real estate company, as well as the regulation. So the regulation, which is responsible for regulating the market, the compliance, are really responsible, working obviously with external consultants, but it's usually based on available data within the period that the award is being looked at.
The Lagos Chamber of Commerce and Industry, LCCI, released its annual report highlighting a challenging year for the Nigerian economy in 2024. At the LCCI 2024 annual general meeting, participants detail a mixed economic picture, with GDP growth improving but inflation remaining stubbornly high. The LCCI expressed concern over impact of rising interest rates on businesses, urging the Central Bank of Nigeria to consider the needs of the private sector. LCCI highlighted the need for a coordinated approach between government and private sector to navigate the current economic challenges and foster sustainable growth.
The exchange rate moved from 800 in December last year to 1,700 this year. Inflation moved from 18 to 35. And so all the indicators are moving in the wrong direction. And we really hope that in 2025, having paid the price for the reforms in 2024, that 2025, the indicators will start to move in the opposite direction. That inflation will start coming down, and that the exchange rates will become better, particularly because the pressure on foreign exchange to import crude is reducing, while we are now earning foreign exchange from exporting refined products. We are beginning to see some signs that by next year, when the refineries are all working, meeting our needs and exporting refined products, that the foreign exchange rate will start to improve significantly. So that the outlook for next year is likely to be much better than the 2024 outlook.
The organized private sector wants to do business, and if we get to do business well, then we'll make more profit, we'll employ more people, and the nation will be at ease. So we need government to give us an enabling playing field so that we can do big business.
And the Lagos State government is gearing up to host the first Lagos Shopping Festival, scheduled from December 23rd to 25th at the Mobolaji Johnson Arena, Lagos Island. The state governor, Mr. Babajide Sanwo-Olu, announced the initiative during the unveiling of a festival symbol at the Lagos House, Lausa Ikeja. Governor Sanwo-Olu says the inaugural Lagos Shopping Festival would drive commerce by supporting local businesses, attracting global brands, and creating direct and indirect employment opportunities through vendor participation, logistics, event and entertainment management.
Lagos will put everything we have in terms of resource, in terms of logistics, just to make it safe, make it secure, to make it an experience that is worth. And at the end of the day, we believe businesses will have been curated. Relationships will have been birthed, commerce will have happened, and entertainment will have been very well christened, and we'll see a win-win situation for everyone. It's really about a convergence of the power of Lagos, where people can, at the location, bring everything about themselves, represent it, and let the Gaussians transact in an environment that brings music, that brings culture, that brings arts, that brings shopping, that brings commerce, that brings everything under one roof. So it's really very audacious, but we believe it will work and it will work well. So that's why the government is supporting it. That's why we continue to be a strong enabler of strong initiatives like this. We will be trying to track, the amount of commercial transaction that will come out of it, so that people will see that indeed, it's a commercial, stroke GDP growth initiative. And that's on this note, I want to encourage everyone, open the door for as many sponsors as they can come in. I want to assure you that it'll be worth your while, and Lagosians will be the major beneficiary at the end of the day.
And now to our first conversation. Recent reports show Nigeria's rising poverty levels are having a devastating impact on the country's education system, revealing deep-seated issues that hinder the nation's human capital development. With over 133 million people living in multi-dimensional poverty, many families are struggling to afford basic needs, let alone quality education. Well, join us now to unpack this. We have Dr. Adironke Kujoris, is international education consultant and advocate. It's great to have you on the show.
Good morning. It's a pleasure to be here.
So, we keep talking about quality education, and right here in Nigeria, it's getting really expensive. Me, for one, I guess my daughter is about to enter secondary education, and the school fees I'm seeing right here is giving me quite a scare because everything's expensive now, and parents are having to deal with a rising cost of living. So, how are you seeing all of this, impacting education in Nigeria?
Sure. I think there are a couple things going on. I think across the globe generally, there is a financial situation that everyone's, getting to bear with. And even the most wealthy are feeling a little bit of an impact of the financial situation across the globe. So you'll even see some of the wealthiest Nigerians struggling a little bit with increases in tuition because of where we are from an economic perspective across the globe and in Nigeria especially. That being said, I think Nigeria has a bigger issue to deal with when it comes to education, and that really is around the fact that we have so many children that are out of school. And their situation is a little different because there isn't it's really not a matter of an increase that has recently happened over the last year or so. It's more cultural. It's more related to poverty in the fact that many of those people just have never thought about sending their children to school. And some of these children have been out of school for, 10 years and even more than that.
So what would you say is the underlying cause of the current challenges facing Nigeria's education system?
I think it's a number of things. First of all, I would say it's a matter of priority. Unfortunately, the people that make the decisions and the people that can be accountable to it have not made it a serious priority until now. And what that means is the budgets that could be going towards education are going to other things. So that would be number one. The other thing I would say is that for those who are sort of in the lower echelon, those who are on the poorer side, there are so many barriers to them being able to educate their children, and they don't see the value of educating their children. So it's both a matter of making sure that parents are aware of the value of an education and the risks that it poses to the country when their children are not educated, but also making sure that any barriers to education are removed. When you compare Nigeria to other countries across the globe who are doing better with education, some of the barriers that you see in Nigeria are non-existent in other countries. It's things like, the cost of registration, or the cost of, children having to buy their own seats in order to come into the classroom, or children having to pay for uniforms and things like that. Those are not existent in public schools in many of the other countries who enforce education for all. So those are some of the things that Nigeria probably needs to look at. And then the wealthy are not really seeing the impact. So for many of the wealthy, they can send their children to private schools and really ignore what's happening with the wider country. And so either they send them to private schools or they send them out of the country. And so they don't get to see, or they can ignore the grunt of what's happening. Unfortunately, that's not sustainable. And we're going to have a bigger issue if it's not addressed quickly. And maybe the last thing I would say is the absence of leaders who really have empathy for the people that voted them in. So if our leaders were more focused on making sure that the children whose parents voted them into office have a brighter future ahead of them, I think they'll make it a priority.
Right, and talking about parents that have to send their kids abroad to get an education, we've seen currency devaluation here impact how much dollars you get. You need more naira now, chasing a few dollars, even though we're seeing some stability at this time, but it has changed a lot when you're looking at foreign exchange. So how do you see this impacting, importation of education, going forward? Are we still, what kind of trends are you seeing, in that segment, where parents, trying to send their kids abroad for education?
Sure. I think there are a couple of things that are happening. Obviously, in the last few weeks here, the naira has begun to stabilize a little bit. If if the naira continues to improve, unfortunately, those wealthy parents might not pay much attention to the education of the rest of the Nigerian populace. But if the naira continues to devaluate for long enough, it's going to bring them back to Nigeria and have them really start having a conversation about the need for quality education in Nigeria. Because they have options and because they can afford to send their children out, they're ignoring what's happening in Nigeria. But once they can no longer send their children out, which, I know that there were a number of children that were going through significant strain in the fall, being able to register for school because their parents could no longer afford it. So when their parents are no longer able to afford an international education, sending them out of the country, sending them to private schools, they will be forced to address the bigger education problem that we have in Nigeria.
We know a couple of countries, holding it down when it comes to developing the education system. So looking at countries like Finland and South Korea, we see they have a quite advanced education system. What can we learn from those countries?
Sure. I think when we look at Finland or South Korea or even the US, I think we need to make sure that we are realistic with ourselves, first of all, in that they are so much more advanced and we need to take the first baby steps to try to get to where they are getting. Some of the things that you'll see that is, that happens in all those countries is the idea of an equal education for everyone. There is equity in education. Everyone is required to be in school, and education is being funded at a certain level. The availability, the infrastructure is being funded by the government and not by parents paying for their individual children to bring in desks and chairs to school. So I think those are some of the things that you'll see across all of those countries. And in order for Nigeria to be able to get there, first of all, we need to make sure that we're identifying all our children. So when you think about Finland or South Korea or the US, for instance, all their children are tracked from birth, and there is someone that is responsible for ensuring that all those children that are born are in educational systems of some sort through a certain level. And that's what we lack in Nigeria. We have a continuous growth in the number of children in our population, and there is no tracking. There's no accountability from the parents. And so there's no way to ensure that all of those children are in school. And in all honesty, there is also a growing industry, or there's a market for children who are not in school. They can go on the streets and beg and make decent money when they beg for the day. They can, obviously, many of them are engaged in child labor. So until we start to take some of these things off the table, make it non-profitable for children to be out of school, we will not begin to see a change in where our education system is trending right now.
Right, and every year we keep having different budgets, for the economy. What kind of spend would you like to see, going forward regards education?
I think it's a couple things. I think there's a lot of conversations right now in terms of the education spend and how to make sure that that budget is taking from the top of the country's budget before going through some of the other bureaucratic systems. But I think it's more than just the budget. For those who remember, there's a lot of conversation today about the education funds that have not been accessed by a majority of states across the country. So there have been funds in UBEC that have not been taken advantage of. So it's not a matter of the money not being there. It's a matter of those who have the responsibility for educating our children not making it a priority. They will explain that there are reasons why they have not accessed the funds, because it's, the funds that are currently there are matching funds, but they're spending money on other things. Everyone's building an airstrip now. Everyone's building roads and other things, infrastructure, but they're forgetting the importance of education and the fact that if we do not educate all our children, the future for our country is really at high risk.
All right, thank you so much. It was great having your perspective. Dr. Adirunke Kujor is an international education consultant and advocate. Thank you for sharing your time with us.
Thank you. It's a pleasure to be here.
All right, we'll take a break now. When we come back, we head straight to the markets. That's in a moment. Just stay with us. Welcome back. Well, let's head straight to the markets now for the TGIF trade. Checking the local bourse and most of the global markets that we track. And we have Anita Edit with the details now. And Anita, quite interesting. The first trading week of December, that's ending today. And for the local bourse, we've seen like a back and forth movement there between the bulls and the bears. But the pullbacks have been quite marginal.
Yeah, the pullback is, first of all, is the first week of December, like you rightly mentioned. And of course, December is a month in which the markets, we always talk about the rally. Although that rally, we actually saw it in January. But at the same time, investors are not really keen on taking much profit. If you take a look at the market, like you rightly mentioned, so far the market is in the green, 0.6% approximately month to date, and then 31.2%. So I think it's rather, I wouldn't really call it cautious trading, but people are actually looking for how to make some gains before you begin to see maybe
because you need the gains to enjoy Christmas.
Exactly.
At some point, so you don't want to
exactly
play too fast at this point.
And of course the value of the naira. So people are actually looking out for how can they make more money. But I think,
well, shout out to the naira. The naira is having a great week.
Like they actually give thanks to what you call the EFEMs. You know the acronym EFEMs.
Right.
So we've had NAFEX, we've had NFEM, we've had DAS, that's the Dutch auction system. I think I seem to have forgotten that the full meaning of the EFEMs, but actually that has also made the naira to gain about for a third consecutive session this week.
It's an enhanced matching foreign exchange system. Quite incredible.
And we hope that this positive momentum on the naira would continue, so that at least we can get to do much things that we want to do with the money. If you want to put it in the stock market, or you want to put it in other investment portfolios. So, but let's talk about Nigeria's stock market first. Like you always start on the African frontier. 0.03% is the pickup from what it had, which was down by a tad of 0.06%. At the close of Thursday's trading session. But so far, we've seen the market in the green and still holding on to 98,000 points, 98,146.43. Johannesburg Stock Exchange, yesterday we saw it at about 87,000, but we saw that slight pullback. But then at the same time, the market at intraday, it was up by 0.14%. So it was just slightly down here before we now see the intraday market numbers. And of course, it couldn't sustain that 87,000 points, which we saw on Thursday's trading session. Okay, so let's look at the other markets for the African continent. So it's the greens have it. One of the colors of Christmas. Christmas has one color which is red and one color which is green. And at some point, if you like some colors, might call it gold. But so far, it's the greens that have it for African markets at intraday trading session. But for the close of Thursday's trading session, Nairobi Stock Exchange was up 1.82%. And guess what? At some point, it was at a 111, but now we're at a 114.31 for that market index. So that's a wrap for the market on the African continent. So now let's talk about the fixed income markets and dive deeper into the activities so far that we've seen this week. It's been quite a very busy week for the fixed income market. First, starting from that Eurobond that we saw. We also saw the Treasury bills auction. We also saw the FGN bond auction, savings bond auction for this month. That's the final one for the month of December, and also for the year 2024. But now let's have a quick review of how this has impacted the fixed income market, and then I'll look out for how the second week of December would be turning out for investors. And we have Adiola Aremu, fixed income dealer and analyst with FSDH, to give us more details about this. Thank you for joining us, Adiola.
Thank you.
Okay.
Good to be here.
All right. Okay, so now tell us first, we've seen this so much activity in the market within the first week of December, but how has this impacted on investor sentiment so far?
So this month has actually been very, very bullish. We've seen a lot of buying interest across the markets, right from the Treasury bills market as well as the Eurobond market. What we saw was that because of the huge liquidity in the system, somewhere over 600 billion over the course of the week, we saw a lot of people buy Treasury bills, particularly the new issuance that was done on Wednesday. So where we saw like CBN DMO actually issue just over 600 yards, and we saw a lot of buying interest on those fronts all through from yesterday till the day before. On the Eurobond side, we saw that the Nigerian, the federal government actually tapped into the Eurobond market for the first time in about 2 years. And that has also actually been received very kindly, because we saw that even though what was on offer was just 2.2 billion, we saw subscription at over $9 billion, which shows that there's actually huge appetite for the Nigerian markets generally. And I think that's very, very good, because afterwards it has actually rallied in the secondary market. So that's actually good appetite for the market this week. However, as at this morning, because of the huge liquidity in the market, we saw that actually the CBN actually carried out more exercise. So we are waiting to see how that pans out over the course of the day.
Okay, so now I heard you talk more about the Eurobond market, but I'd like to know how its issuance so far will impact the level of domestic yield curve.
Right. So I think that what we'll see is that on the Eurobond side, the more we're able to borrow on that side, the appetite to borrow on the domestic side should reduce slightly. So at some point next year, we should see, reduced borrowings on the domestic side, and that should mean that the yield curve, should taper a bit. Now, if we also listen to what the CBN governor said at the last MPC meeting, he said that most of this, tightening stance that they've gone on will actually show up more in next year. So from Q1, Q2 next year, I expect that the CBN won't be as aggressive in tightening. And once the supply starts to, reduce for government securities, we should see even more, buying interest and, rally on that side. So the yield curve should actually reduce sometime next year.
Okay, so now my third question with you is, well, we've seen this is the second in the last 2 years, second time that we're seeing the Eurobond issuance. But are we likely to see another Eurobond issuance by the federal government anytime from next year? And then, because that's because of the government's concerns over debt sustainability.
Right. I think that's a very good question. The truth is that if we look at the timing of when they're coming to tap in right now, where the Fed has started to cut by about 75 basis points, there's even a chance that there'll be another 25 basis points in the December FOMC meeting. What I think is that by next year, we should see most global markets, most global economies start to adopt a more loosening approach in their monetary policy, right? And that will mean that it may be cheaper for Nigeria to tap into the Eurobond market. However, some of those things actually, depend on approvals from the Senate and all that, right? With the budget and everything being passed already. So it's maybe a good time actually for Nigeria to come back next year to get it at much cheaper cost than what it is currently. Because for the two Eurobonds that were issued, the 2031s were actually issued at 9.625 coupon, and the 2034s at 10.375. So we may be able to get slightly cheaper, funding next year. And if you look at the debt sustainability part of it as well, you see that the FX part of things have actually made it look like there's actually been that very large growth. However, I think that it's still very sustainable for Nigeria to still borrow a bit more going into next year.
Okay, so now you talked about next year, but let's talk about the remaining parts of December and the year is almost ending. What are your expectations for the fixed income market from next week?
Right. So, I mentioned earlier that, this week has been very bullish. We've seen rally because of how liquid market has been. I think from the OMO auction today, tightening that system liquidity may mean that, we go back to less activities like we saw sometime in November. I think that also you'd see that a lot of people will try and, anticipate to see if there will be another OMO auction after this, because I think in November we had just one all through the month. So people will try and see if, CBN will come back, a little more. So next week, activities may be slightly lower compared to what we've seen this week, where it has actually been been very active across board, both on the local and domestic side. So next week, I expect to see slightly less activities because of how tight system liquidity will be across board.
Tight system liquidity. Well, we'll have our outlook for that and see if it comes to pass. But thank you so much for your time on the show. Adeola Aremu, fixed income dealer with Access, with FSDH.
Yep.
Okay. So, Adeola, just giving us details about the fixed income market. First of all, a review of the week, and then an outlook for what you investors and other would-be investors should expect from the fixed income market, from the domestic fixed income market. Now, let's talk about the Middle East market. Most of them were in the green, except for the Abu Dhabi index. Yesterday we saw the Dubai index being in the red, but this time it's a flip over for the two of these indexes on the United Arab Emirates. So, one in the green, one in the red, 0.57% for the Dubai 4,844.81, while the Abu Dhabi index at intraday 9,269.26. But the other two markets on the Middle East were closed for Thursday. I mentioned that it's always a Sunday to Thursday, not the usual Monday to Friday, which most parts of the world are always observed. For the Saudi Arabia's Tadawul, it was up by 0.38% for the close of Thursday's trading session, while Qatari Stock Exchange in the green, 0.52% for the close of Thursday's trading. And now let's talk about the United States stock futures. Stock futures, after closing Thursday's trading session, mostly in the red, they were slightly unchanged. And this is because investors are actually looking out for the jobs report, the November jobs report, which is expected to come in higher at about 214,000, which is significantly higher than what was turned out in the month of October, which was higher by about 12,000. So this is what the markets will be expecting, and that will also give a gauge or an insight into how the U.S. Fed would take its interest rate decision in just about less than 2 weeks from now. Week to date, the S&P 500 is up about 0.7%. The NASDAQ is about, that's 2.5% gain, while the Dow Jones Industrial Average is down by 0.3% so far, and it's a pullback for what we saw yesterday. We had seen it at about 45,000 index point, but it is lowered a little bit, 44,845.00 for that market index. And finally, if we have more chance, Asian markets, well, Asian markets, they're mostly mixed, and then they're still watching the political turmoil in South Korea.
Right.
And then, of course, India's economy, where we see that India's economy, the inflation is at a 14-month high. They kept interest rate unchanged.
Right. So it's looking like for 2024, most of the markets that we track is all about political sentiments.
Political turmoil everywhere.
Political turmoil.
France, South Korea, I don't know, no, U.S. not yet. We're still looking at how Trump will eventually come in, and
new presidency,
the whole world would respond to how Trump's presidency will affect everything from the stock market to the commodities market to the cryptocurrencies market. So that is on the radar.
2024, very interesting year. Thank you so much, Native, for giving us the details there. But let's get a check on what's playing out in Europe now. European stocks remain steady, and investors seem undeterred, despite the political uncertainty in France after the pro-Macron government collapsed following a confidence vote. For more now, we have Ekrem Akishi in Berlin. Great to have you, Ekrem. So why are European markets unaffected by the government collapse in major European economies?
Thanks for having me. Well, the short answer is markets bought this political turmoil well in advance, so to speak. The collapse of the French government was widely expected by pretty much everyone. Some European market analysts say this is some sort of a relief for the markets. Now that political uncertainty is over, the government is out, and soon there will be a new one. It didn't really strike anyone in a shocking way. The idea is now one can expect more clarity on the political front in France, and it would lead to a sort of recovery in the economic activities sometime next year. What I'm hearing is that investors and experts in Europe are of the opinion that, yes, it's difficult now, but the gloom is not going to last forever.
All right, walk us through President Macron's reaction to all of this.
Well, this no-confidence vote that toppled Barnier government is the first successful one since the defeat of Georges Pompidou's government in 1962, at a time when Charles de Gaulle was president. So the situation is pretty unique. Last night, President Macron announced plans to appoint a new prime minister in the coming days and emphasized that the top priority for the new government will be passing the 2025 budget and addressing fiscal challenges. He also accused far-right and left-wing parties of creating instability. Now, the candidates for the next prime minister include Defense Minister Sébastien Lecornu, centrist ally François Bayrou, and former socialist premier Bernard Cazeneuve. The political turmoil arrives at a critical moment as President Macron prepares to host global leaders, including US President-elect Donald Trump, for the reopening of the Notre Dame Cathedral. And he has more than 2 years of his presidential term left. Despite some opponents calling on him to resign, he rejects this type of scenario and calls it a political fiction.
And we know political uncertainty is not the only problem on the French economy. France is also opposing the EU Mercosur deal. What is behind this?
This is a little bit of a tricky situation as France is pretty much at odds with the EU over the Mercosur deal. Now, European Commission President Ursula von der Leyen is currently in Uruguay, hoping to finalize years-long negotiations on the EU-Mercosur trade deal, which is fiercely opposed by France due to its potential damage, especially to the country's agricultural sector. President Macron yesterday reiterated France's rejection of the EU-Mercosur trade deal, calling it unacceptable because it could create unfair competition for French farmers. Backed by the French parliament and nationwide farmer protests, President Macron aims to form a blocking minority within the EU. France's stance is supported by Poland but opposed by major EU members like Germany and Spain.
All right, thank you so much. That was Akram there giving us details from Europe. Thank you for all of those details. All right, taking the conversation further now. We see earlier this week, President Bola Tinubu visited South Africa for high-level engagement with President Ramaphosa in South Africa. Let's get a sense of all that played out and what to expect for the South African economy in terms of data. Joining us now, we have Innocent Somoza, our correspondent in South Africa. Great to have you on the show.
Very good afternoon to you, colleague, and our viewers around the world. It's good to be with you once again.
Fantastic. So, yeah, a lot played out this week between Nigeria and South Africa. Talk to me about how South Africans are reacting to the visa requirements easing for Nigerian tourists.
Well, indeed, lad. In fact, the Nigerian nationals that I interviewed, they were also worried about the issues around visa application because it's a tedious process that makes them very, very much live in a precarious position. But they were very much excited, most of them, that at least now there's a step in the right direction between the two countries in dealing with the issues of visa. Because you would know, laddie, that if you're an entrepreneur trading, you want your papers to be in order so that you can be able to trade freely. So the visit of His Excellency Bola Tinubu in South Africa was really, should I say, for lack of a better term, catharsis, a psychological healing for many Nigerians in South Africa. They were excited that the fact that some of the issues that they raised around visa regulations and applications were actually tabled in that particular bi-national commission, Ladi.
Right, and are we expecting Nigerians to flock to South Africa for the Yuletide this December?
Well, Ladi, no doubt about it. You would know that Nigerian brothers and sisters are everywhere around the world, and they are contributing largely to different economies. I guess this will open doors for many Nigerians who would want to basically trade in South Africa and really better the economy of South Africa. I mean, just recently, Ladi, we heard from Stats SA that the GDP, weakened by 0.3% in the third quarter. This is between July and September of 2024. And we've seen agriculture industry being a drag to this production. And I guess if we come with expertise as, learning from Nigeria, Nigeria learning from South Africa, I guess this would be a step in the right direction, Ladi, for a lack of a better term.
Fantastic. So it's the first trading week of December. What economic data should we be expecting in South Africa next week that could drive market sentiment?
Well, Ladi, as I've indicated that the GDP was dragged down by agriculture. It's leaving a dent on the GDP growth of the country. But also we are seeing, because of the issues around, it was plagued by drought and production of field crops such as maize and soya beans. But the silver lining, Ladi, as you going back to your question, is that finance was the largest positive contributor, pushing higher by the banking, insurance, real estate, and other business services. So it does seem as though the finance sector is holding down the economy of South Africa. And I would imagine that we've really seen the banks making money in this previous Black Friday. The smallest banks making billions of rands in that Friday. So looking at that transactions moving into December, it does seem as though we'll see a lot of purchases that will be driven by the likes of finances. But again, lad, it goes back to the government of national unity. As agriculture is not doing well, it's pulling down the economy of South Africa. So the onus now, it's in the Minister of Agriculture, that is John Steenhuisen, to really invest more funds into research of, to look ahead in terms of the droughts that might come ahead, and research around agriculture that will help to drive the economy forward, Ladi.
Yes, and how are South Africans gearing up for Yuletide spend?
Ladi, come again?
How are South Africans gearing up for Yuletide spend? Christmas is upon us at this time. Are you feeling the Christmas vibe and energy in South Africa?
Yeah, well, the mood is already there, and I hear people in the offices saying that they have festive fatigue. It's a word in South Africa. It does seem as though people now are tired. They want to go and rest. There's a time of giving, Ladi, and I believe that you will send my gift to South Africa, and I'll send you a gift to Nigeria. It's a time of giving. But over and above, Ladi, what the Treasury is advising consumers is that they must make sure that they don't just click on links that is sent on WhatsApp messages or on SMSs, so that they prevent themselves to be scammed because this is a time of giving. It's a beautiful time of family, but at the same time, the scammers are not sleeping. So they're being informed, they're being warned that to be cautious as they spend their hard-earned money. People worked throughout the years, putting money aside to go for vacations. So, they might get scammed if they don't really put up with the times and make sure that they don't just click on any links that has been sent to them. So that's what they're being told to do. But it's a beautiful time. The mood is already there in South Africa. I can feel it. It is here, Ladi.
Right, definitely. And I can't wait to see what you have for me this Christmas, what you're going to be sending me from South Africa. But definitely, I know it's, hopefully, we're going to have a white Christmas definitely this time. But thank you so much, Innocent Samosa, there, for bringing us up to speed on what's playing out in South Africa.
All right. Thank you so much, colleague.
All right, now to other stories. See, Kenya's central bank has slashed its interest rate by about 75 basis points to 11.25% as the East Africa's largest economy seeks to rev up sluggish growth amid easing inflation. According to Governor of the Central Bank, Kenya's economy grew by 4.8% in the first half of 2024, slowing from 5.5% in the same period last year, and necessitating the easing of monetary policy to support the economy. The committee attributed Kenya's stable inflation mainly to non-food, non-fuel inflation, which eased to 3.2% in November from 3.3% in October. And the Egyptian Ministry of Petroleum, led by the minister, set to launch a new gold and associated minerals exploration bidding process in the first quarter of 2025. This announcement came during a meeting with officials from South Africa's AngloGold Ashanti, where discussions centered on the ongoing exploration and drilling operations in Egypt's Sukari gold mine, following AngloGold's recent acquisition of Centamin, the mine's former owner. The meeting also highlighted the progress of establishing a mining school in Egypt designed to train local youth in mining skills. The school initiated by Centamin is scheduled to begin operations in September 2025. Plus, the Egyptian pound weakened to close at about 50 points there to the dollar, having reached the 50-pound psychological level barrier for the first time since March. That's according to Egypt's central bank. The pound has traded within a narrow range, just slight short of 50 to the dollar, since Egypt signed the $8 billion financial support package with International Monetary Fund. That was early in March. Under the IMF agreement, Egypt pledged to let supply and demand determine the currency's value. In addition, rapid growth in Egypt's money supply has put pressure on the dollar exchange rate while helping to fuel inflation. M2 money supply grew by 29.59% in the year to the year end September, compared to about 2.8% in the United States. And Ethiopia has earned over $674 million from coffee exports in the first 4 months of the fiscal year, exceeding its targets by about 127%, according to the Ethiopian Coffee and Tea Authority. The authority communications director indicated that the country has exported 150,000 tons of coffee over the last 4 months, surpassing its targets by about 152%. Compared to the same period last year, the export volume increased by 62,000 tons, and revenue rose by $226 million, representing a 51% growth in that market. Alrighty then, I'm going to check on what's playing out in the crypto market. It's been the bullish euphoria so far with green everywhere, but Friday, here comes the red. Yeah, going by Coin 360, I would say it's mostly red there on the screen, with Bitcoin crossing $100,000. Investors in the market have been looking out for that to happen for the longest time. But yeah, it did cross it, about $103,000. That was the high. But now it was a fast pullback, and Bitcoin is at about 4.36%, 98,000. So I guess the bears are trying to take charge at this point, since Bitcoin has finally crossed that 100,000 psychological level. BNB, also a big pullback there. Ethereum, not left out. But we have a couple of pockets of altcoins there still trying to hold up in the green, with investors finding opportunities there. But let's look at the top cryptocurrencies that we track now. The sentiment in the market, we'll also see how investors are feeling at this point. So there's a big 4% drop for Cardano and XRP. Both were acting like stable coins for the longest time, but we're seeing Cardano, XRP, they've crossed some levels, trying to get back to their previous highs at this point. But it's 4.42% drop today, 2.39% for BNB, and a big 4%, 1.35% drop for Ethereum. So is the bullish sentiment over? Let's find out. Let's talk to Solomon Amunde now, our financial market analyst. Hello, Solomon.
Good afternoon, Ladi.
Good afternoon, Solomon. So it's a red Friday right here in the crypto market, but we cannot deny the fact that Bitcoin crossing $100,000 for the first time ever. That definitely was a big jump there for the crypto industry. But talk to me about this pullback we're seeing. Is it coming too fast? What's happening here?
The pullback is actually as expected. We hit the new milestone, round figure, something that everyone has been looking up to. And what's expected naturally is people would want to take profit. So you can imagine immediately we saw that huge push slightly above 100,000 to about 104,000. Most persons started selling off aggressively. Yeah, so I was expecting it to correct to like $88,000 or $90,000, after which we'll see like a support, then we can make another leg up.
Well, is it time for the bears to make money, shorting Bitcoin at this time?
Yeah, actually, in a bull market, it's very unwise for anybody to be bearish. It's very unwise for anyone to try at a time where to short. The smartest thing to do is look for the areas to go long. So you don't need to speculate where you would make a short or where you would see a correction. Rather, you should speculate where you should go long. So I don't think anybody should be trying to short the market right now. So the bears shouldn't think about anything relating to shorting the market. They should just wait till the bull market is over.
Right, and talking about the bull market at this point, we've seen the likes of BlackRock, Mara Holdings buy about 10,000 Bitcoin with this dip. We're seeing. Why do these companies keep buying Bitcoin? A lot of Bitcoin around these prices, about $100,000.
Yeah. So basically, it's based on data, and they are being very optimistic, and they 100% understand what it means to have the president of the United States to be pro-crypto. So they know that the run hasn't actually kicked off yet, and they're anticipating that because the next 4 years of President Donald Trump will be quite amazing for the crypto ecosystem. So all these companies are positioning themselves and most likely forecasting to see Bitcoin go above $200,000. So they are taking positions right now.
So what are you seeing could be another tailwind and catalyst for Bitcoin, to stay above $100,000, going into January?
All right. So I think first things first, most persons right now would be looking forward to President Trump's speech come January. And at the same time, too, one of the major catalysts is most countries have started looking at creating a strategic Bitcoin reserve. So they are gradually stacking up Bitcoin, like they are buying every dip they see. So even if we see a dip to $80,000, they'll scoop it up as fast as possible. So within the next few months, we would see so many countries come out openly to state their support for Bitcoin and that they're adding Bitcoin to their ledger.
So we also see lots of AI agents. That's trending at this point, with tokens doing huge numbers in just a few hours. So talk to me about this trend. What are these AI agents, and what's the hype about at this point?
Yeah. So basically, we are seeing the AI agent hype now in the crypto ecosystem and also in the artificial intelligence world. So in a sentence, the AI agents are just a piece of software that can be able to self-execute tasks on their own to meet up a particular goal or desire. So unlike AIs cannot just execute most of those tasks. They don't have the right to take those decisions, but the agents can actually do all of those stuff. And we are currently forecasting that in the crypto ecosystem within the next few years, almost 80% of the transactions on chain will be done by AI agents. So right now we already have some AI agents that are carrying out some transactions, buying some tokens, selling some tokens, creating some tokens, and making profits actually. And this is still like the phase one. So that's why we're seeing the hype. It's normal in every narrative. We tend to see like a huge hype, of which there will still be lots of scams. After some time, we'll see the actual projects that are actually building. But no doubt, AI agents are here to stay long term.
All right, very quickly before I let you go, Friday's coming off red at this point for the market. Is this telling us what's to play out this weekend? Is it a red weekend?
Yeah, I think the weekend Bitcoin should consolidate between 92,000 and 98,000, but I still expect us to go above 100K towards the last weeks of December.
All right, definitely keep watching out for that. Thank you so much, Solomon Amunde, financial market analyst. Thank you.
Thank you very much, Laddie.
All righty then. So that's how most of the markets for the TGIF trade, that's how it's looking for now. Still, I'm seeing Bitcoin trying to get back above $100,000. Maybe the bears might want to take control of the market at this time, but we'll see if the bulls would defend that 100,000 level. And definitely hope you're making profit before the celebration starts this December. But thank you so much for watching. I'm Laddie Williams from me and the team right here at Channels HQ. It's bye for now.